Let's go to the edge of the trading floor and visit with Scott Gekas. He is with Longleaf Trading, and he joins us now. Happy Monday, Scott. The estimates are starting to come out now. Private estimates here for the world supply and demand estimates tomorrow that will be released. What are your thoughts on these?
Yeah, well, it's all going to come out to what the USDA report's going to come out. We've seen estimates for soybeans anywhere between 900 to over a billion on the high side. Obviously, that would be the first time they ever had that. So either way, we're expecting record level supply. So that's the main focus that we're going to be watching. With the record amount of supply right now, it doesn't even matter if we get anything done with China. It's not going to affect the world ending stocks in the short term. With that being said, China's still going to other sources. They just approved rape meal from Kazakhstan. So China has no urgency to buy U.S. beans at all. So we're going to keep an eye on that. The flash sales of corn definitely was supportive, as we can see with the price where it's at now. So with the wheat market, it's just waffling back and forth. We expect U.S. demand in wheat to be a little bit stronger than expected.
All right. I want to take a break here, and when we come back, I want to talk about the livestock trade and also get your thoughts a little bit more on that China issue as well. Scott Gekas here with us. We've got more of the Market Day Report in just a moment. We're in the live cattle market. Things have been a little bit mixed, but the feeder cattle market has clear direction. That market is actually higher last time we checked. February live cattle down 40, 121.13. April down 17 at 123.45. I might go back here and mention December. That's the one that kind of gives back and forth direction with the cash. Down 35 right now, 117.55. So a lot of these contracts all to the lower side here, with the exception of August. That's the only contract that's higher. It's only 13 cents higher. If we find out what's going on in the feeder cattle market, this is a market that's been stronger ever since the get-go. First thing this morning, January feeders up 85 at 145.22, and March is up $1 even at 142.88. April feeder cattle up 70 at 143.22. And over the hog complex, we've got the February down 72 at 67.15. April hogs are down 53 at 71.80, and May hogs are down 50 at 76.38. Let's continue our conversation with Scott Gekas there at the edge of the trading floor. First of all, your thoughts here in the livestock trade.
Yeah, with the livestock trade, with the cattle market in particular, strong holiday demand, much stronger than expected. Trade news back and forth with China. It's rumored that China could be starting to import a little bit more U.S. beef, just as a tool just to curb trade war talks. So if that happens, we can expect a little firmer tone in the cattle market. As far as the hog market goes, African swine fever is still spreading. They had another 2 more cases in China over the weekend. It's clearly not contained. We were targeting that 10% aspect all summer. It's clearly well above that 20-25%. They have yet to release any type of data from that, but from what we expect, it's well over that 25%. So we're expecting them to continue their import campaign, even with the high tariffs. They imported U.S. pork for the 2 second weeks in a row, so that's definitely supportive. We expect a little bit of bump in the deferred contracts in the hog market.
I want to ask your opinion here, Scott, for just a moment, and set aside any specific commodities, just ag general commodities, just set all of those aside for a moment. What are you hearing from Intel there on the floor about this deal with China back and forth? Is there any new news, whether or not that we are going to have an agreement, that there's optimism, pessimism, whatever you're hearing?
I would say more pessimism than optimism. With everything going back, I mean, it's a new headline every other day that is deterring trade war talks to be moving forward, or, supporting them. Either way, I mean, at any point in time, you can see a headline break and it completely throws the market out of whack. The fundamentals as well as the technicals do not mean anything with these big news levels coming out. So we're going to see how this is all playing out. But, I mean, it's a day trader's, perfect dream right now, just because the headlines are moving markets so dramatically.
One of those headlines also is Brexit. What's the latest?
Right. So with the Brexit, everyone was expecting some type of vote come out being released tomorrow. Over the weekend, May delayed the vote. She is still not saying anything about a definitive date. So you've seen the British pound absolutely collapse overnight. So we're going to keep an eye on that. But either way, I mean, that's a very big deterrent for European markets, as well as it does have some impact on U.S. markets as well.
Still headline driven and still a lot of volatility then.
Oh, yeah, for sure.
Okay, Scott, thank you very much. Scott Gekas there at the edge of the trading floor in Chicago. He is with Longleaf Trading, and one of the things that he did mention, news is driving the markets right now, and still a lot of volatility.
You know, similar to where we left off on Friday, headline-driven markets.
It is.
Okay, we'll see.